Hey, good morning. This is Chris Robinson, Robinson Ag Marketing. Thanks for checking in. Overnight markets for heading into this Friday, April 24th. Corn, a 3 cent range. Uh, these corn's still sitting at 485 and a half, uh, but I think the 3 cent range. Quiet night. Beans, a 7 cent range. It looked like they were going to try and push it a little bit lower. They've done a lot of damage to beans here, since the Monday, Tuesday high, where we failed at 74. But, as we're sitting here, we're trading at 54. So it's 20 cents off that 2 year high. And they're still hanging in there relatively well. That's what I think is interesting about the beans. The wheat down a penny and a half. Lots of volatility, obviously, in KC. KC did give us, I think it was a 22, 23 month, 24-month high yesterday in July, and a little bit lower overnight, but not surprisingly. What's the big thing today? May options expire. Don't get caught with any May options on you don't want. Make sure that you replace your protection. I don't. And your protection is relative, right? If you've got a bunch of unpriced bushels, you need to put. If you've sold, half your crop already, then you need some puts for the rest of it. But you probably need more calls because there's still a lot of weather risk in the next 2 months. So don't be afraid to manage risk after the cash sale. Perfect example will be what happened with KC wheat. KC wheat, hit 660 uh, about 2 weeks before the last USDA report. USDA report was terrible. We broke down to $6, 60 cents. If you threw the towel in and got mad, made cash sales, and then turned around and watched it rally to 680, well, you made an emotional decision. So the puts and the calls are a business decision, period. You're already bet long. You've already made the big emotional decision. You're a farmer, so you need higher prices. What we're trying to do is use these options to defend rallies until you sell the wheat or the corn or the beans or the cattle, whatever it is. Defend the rally, and then in certain circumstances, if it's in your budget, re-own the stuff that you sold for cheap in case we continue to go higher. If this is a 2012 year, right? And I don't know if it is or isn't, but if it's 2012, 2012, we made our lows late in May, June, and then we were off to the races because of the weather. So I'm not promising that's going to happen again, but I'm just telling you that is the reason that we hedge both before and after a sale. Crude oil trading at 93 to 95. I think as long as crude oil stays under 100, that's positive for everybody. Um, the never ending, every 12 hours we get a new tweet about what's going on in Iran. We'll see how that works. The protein complex, we were able to eke out a higher settlement across the board yesterday, but a lot of damage, again, technically has been done on the cattle. The June fats basically gave back about 38% of the last rally. May feeders gave back about 50%. That 357 level in May is very, very, very key. And June hogs, they've just about filled that little gap. Hogs are still under pressure. They had a little bit of a bounce, to 104 in June. If I'm a hog producer, I'm making sure that I've got at least the buck protected. All right, guys, this is Chris, 312-638-8868. If you're looking for help, go to robinsonagmarketing.com. I do these morning and afternoon summaries. I also do a daily letter after the close with specific um, technical points where there's support and resistance. I do a weekly wrap on Saturday where I go through about 20 charts and break it down from a longer term perspective. And then I also do a weekly webinar. It's about 15 minutes. It's kind of like doing a mini seminar. I go through what I think is important. So there's a lot of opportunities for you to check in and find the information that you need. All right, this is Chris. Have a good day. Take care.